My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Welcome back. Today, our special guest is Nicole Fiore, who is a real estate entrepreneur, and she and her husband, Colin, are moving from small multifamily, so think duplexes, triplexes, fourplexes, into larger multifamily properties. In fact, I had the pleasure of being on a webinar with these guys and our clients, the Turcottes, not that long ago, and they're raising capital for a very interesting multifamily property. I believe it's 36 units, if I'm not mistaken. So that's 32 units. Yeah. What's 4 units here or there?
Maybe we'll add some.
There you go. So we're bumping up into bigger deals. Love what these guys are doing. So Nicole, welcome to the call. Great to have you.
Thank you. Thank you so much for having me.
Yeah. So, hey, Nicole, tell us a little bit about how you and Colin got into real estate in the first place. What was that spark? When was that? How did that all kind of come to be?
Colin would say he started, 2013-ish when he bought like a triplex with one of his friends. Mm-hmm. But that's the story where, you start in real estate investing, but with no education, you kind of do it all wrong. Mm-hmm. And there's no signed agreements. There's no discussion of like exit plans, and none of us knew what we were doing. I was in the picture at the time, but the girlfriend. No. And then that we sort of like moved away and then sold our share. And what really got us going was when we were living in Vancouver. Colin was hiking up a mountain. I went on my own to this like weekend work. Well, it wasn't even a weekend workshop. It was a free event with, like the handsome HGTV guy.
I think I know exactly who you're talking about.
Yeah. Everybody knows.
Was he at the event?
Guy. He was at the event.
Oh, wow.
Yeah, that was the draw. Yep. And I just remember sitting in the audience being like, oh my God, like we can do this. Like we can do this. And so that experience quickly turned into, joining an education program. And education's always been a huge part of our foundation. Like every time we've wanted to level up in our strategy, or in our markets, or just in the whole game in general, we've always seen education or some kind of mentoring, like coaching, as a way to get us there.
Yeah,
it's been very valuable in our journey. And so, I mean, we did the thing, like we joined the group, we learned everything we possibly could, but at the beginning we had no money.
Well, so first of all, you went to this thing by yourself.
I did.
Boyfriend, and then I dragged him with me. Boyfriend or husband Colin was hiking up a hill doing his own thing.
Yep.
So so you signed up and kind of told him when you got home, hey, guess what we're doing next?
Yeah. So I signed up for like the weekend workshop at that point, which was, a significant investment. It wasn't the whole shebang, but I brought him with me to the weekend workshop when we went.
And that got him in.
Yeah. Oh yeah. We at the end of the 3 days, we looked at each other like, are we going to do this? And
good.
But I mean, we just both, when you just kind of know something, there's just something that pushes you to say,
you know what? Not everybody knows that, Nicole. Not everybody connects with their spouse on this journey. So that's a huge advantage that you guys have, that the Turcottes have, is you've got a ready-made partner power team with you, living with you. And I mean, doing this stuff day in, day out. So you guys got massive education about this, coaching, training, all this kind of stuff. Very important. I get it. Tell me a little bit about the actual properties. What did you buy first? Where was it? What does your portfolio look like these days?
So when we first joined, we had like maxed out every credit card we had, and we were getting married the next year, and we took all that money and put it into buying this education program.
Wow.
And so we had no money when we started out. Nothing. Like we were, negative money. But we had RSP money. And so we really learned how to lend our RSPs, and we understood that whole aspect of it. So we started off as lenders, learning that side of real estate investing, because
Okay. Yeah.
that's a huge part of what our education was, is that it's not like real estate investing isn't just being a landlord or being a realtor, right?
Mhm.
It's not just two things. We learned about land developments and how you can invest in them from day one, like with like big companies,
Yeah.
you know, um, or do smaller syndications with, people who provide that service. And so I'm very thankful for that experience, because we became the lenders first, and we sort of understand that side of things. Like, we
Yeah.
still lend out any kind of money that we make in real estate. We always automatically turn around and lend it out.
Mhm.
And we understood, it got us a background view of how things work, like
Yeah.
how to set up deals and how to,
Well,
what a
how to
syndication
analyze deals
actually
from an
is.
investor's point of view too, right?
Yeah.
Exactly.
Yeah.
Cool. So how much did you guys start off with, if you remember, that first RRSP
Yeah.
mortgage
So,
loan, whatever it was? What did that
yeah.
look like for you guys? And what kind of time frame was it? Do you remember? It's been a little while.
So, like, I remember how much we started with. We
Yeah.
started with like $250,000 of RSPs. So we
That's
had
pretty
a
good.
significant chunk of
Yeah.
RSP money. But when you look at it, you're like, well, I can't do anything with this. Like, we can't buy a property with it.
Right.
Or at least we thought.
Yeah. Yeah. Yeah.
But we can lend it out. And so we started with like $250,000. And because we were not accredited investors, we were eligible. We sort of doled it out into smaller projects. And so I
Mhm.
think we were into 7 land developments, 3 or 4 smaller, like short-term syndications, which are just like maybe like it was a townhome complex that was like built like a few row houses, or
Mhm.
I don't know. I can't remember all of them at the beginning
Right.
because they were so short. And so it was like $25,000 here, $25,000 there, a small chunk here, a small chunk there.
Yeah.
And then we even lent out our line of credit, like did the thing that they told us to do, which is lend out other people's money. So
Mm-hmm.
we
You
we
got a
we
HELOC
got a
and
line of credit,
yeah,
and then we lent it out immediately. So
very nice. So you okay. So what about your first active deals? What was the
right.
first property you guys actually did? How did you come up with the money for the down payment, repairs, whatever? How
Yeah.
did that work?
Yeah, so within 1 year,
Yeah.
we had researched like 4 or 5 different markets. We, tried to build teams in different regions, and we settled on Cambridge, Ontario.
And
And
you guys are
and
living in Vancouver at the time, is that
we were
correct?
living in Vancouver, yeah. So
Yeah.
we bought a house sight unseen. It was the house that smelled like cat pee. It was the divorcing couple. Like, it was all
The
the things
perfect
that sort of
situation.
lined up.
Yeah.
And at the time in 2017, there were bidding like wars in Cambridge. Things were going for like $150,000 over asking, and
Nice.
we ended up getting this single family home for what it was asking because of the situation, right? Like, the couple just wanted it out, or wanted, it done with, and it also smelled like nobody wanted to go see it because it smelled like cat pee. So
Good old
so we
cats.
picked it up. We picked it up, and the capital. So we ended up doing a mortgage plus improvements. So that was how we were able to pay for the renovations, because we actually didn't own our own home, and we were maybe going to live there like
Mm.
eventually.
Oh, I
So we were
see.
able to do a house hack.
Aha, nice. Okay.
So I didn't have a job in Vancouver at the time, and we were gonna let's just move to Cambridge. Why not? Like, let's just focus on real estate investing. So we ended up doing it that way. I ended up getting a job like last minute, and working for Vancouver School Board, because I'm a teacher.
Mhm.
It was, I wanted that job.
Nice.
I
Okay, so you
really
stayed in
wanted
Vancouver.
that job.
Are you guys still in Vancouver at this point? And now?
No,
No, where are
we've
you guys?
done a few moves since then.
Okay.
Coast to coast homes. That's us.
That's where. So where are you based? Where are you based right now as we're talking?
Right now we're in Moncton.
Moncton, New Brunswick.
Yeah,
Nice. Okay. Yeah. You have one side to the other. Okay.
exactly.
Very cool. So you got in your first house, kind of house hacky type thing.
Yeah.
Now, fast forward a few years. What does the portfolio look like today? You mentioned that you had a number of smaller
Yep.
multifamilies, and you're starting to get into bigger ones now.
Yeah. So over the course of 2020 and 2021, we realized we'd bought another property before then. And we were living in the main floor and renting out the basement. So we had 4 doors. And we knew we had to level up. We knew we had to figure out how to do this whole partner with people
Yeah.
thing that everyone else seemed to do, but we weren't quite sure how to do it. But
Hmm.
maybe it was just we didn't have the confidence that we needed to be able to do it. And so we joined another group,
Hmm.
and that gave us the network, the support, and the education, like really, really clear step-by-step rules. It's like first do this, then do this, then do this.
Hmm.
And like wonderful access to mentors and coaches
Hmm.
that if you're like, okay, so I have a meeting with a potential JV investor, what do I do now? Like
Hmm.
it was very
Hands
it
on.
was it was extremely helpful, right?
Perfect. Yeah.
Um, I don't think that exists in a lot of other places. So,
Hmm.
if anybody wants to know, let me
Hmm.
know.
Yeah. Yeah. Yeah.
um, and yeah, so we started, like networking and getting to know people, getting to know markets, and we had a few properties sort of just come to us because we'd been talking about it, and they
We're
happened to be in Moncton.
in Moncton. Okay, got it. Yeah.
Yeah, yeah. And
I'm
they happen to
connecting
be
the
in
dots here.
Moncton.
Yeah.
Yeah, we haven't like it's we sort of just like fall. I mean, we don't fall into our markets, but we're kind of open to lots of opportunities, and then opportunities find us.
Right. Yeah.
And
It's
then,
funny how that
like we do
happens.
our research, we make sure that it's obviously an appropriate opportunity. Like Deep River, same thing.
Hmm.
The whole the webinar that we did last week, same thing, like opportunities find us, and then we make sure they're the right opportunities, and then we go forward. So,
Yeah.
we started learning about the Moncton market, and it was on fire. Like
Hmm.
at that point, at the end of 2020, we thought maybe we'll move to Halifax because at the time we were living in Ontario.
Hmm.
We're like, maybe we'll move to Halifax because Colin is from Halifax. And we were looking at homes in Halifax, and it ended up being like, no, I think we're just going to move straight to Moncton because, over 2020 and 2021, mostly in 2021, we bought about 30 properties. They
Wow.
were all duplexes. Some were single family homes that we flipped. But most of them we still have, like, and we've purchased them with partners. So, duplexes, triplexes, fourplexes, and then we have 4 apartment buildings. We've sold one. So we had 5 and now we have 4 apartment buildings.
Very nice. So that's a massive amount in a short period of time, Nicole. Congratulations, first of all.
Thanks. That's a lot
So
of work.
I'm imagining, I could be wrong. Are you guys focused on this? Are both of you focused on this full time?
I am. I never
Mhm.
went back to teaching.
Yeah.
But Colin actually still works full time,
Okay. Very good.
which is, yeah.
So doing all of these deals with different partners, were you guys primarily the deal finders, the active partners, and you're bringing on more passive joint venture money partner type situations?
Yeah,
Yeah.
exactly.
Perfect.
Yeah.
And these people that you were finding as your joint venture partners, where were you finding? So this is kind of my wheelhouse. I'm always curious about this. Were
Yeah.
these from within the groups that you're active with, other real estate investors who were looking for different markets, that sort of thing? How did you typically connect with these people?
So mostly this was 2021 and
Yep.
a little bit in 2020. And so the world kind of existed in social media at that point.
Mhm.
There were no in-person events. And so it really was a lot online.
Mhm.
And it was all about us talking about what we're doing and sharing it all over the place online. And what our coaches always say is like planting seeds and
Yeah.
just basically talking about what we do and talking about what our job is, and really seeing it as a job, taking that perspective. It really it may not change something, it may not seem like a lot to the like outside, but it really changes something, I think, inside of you when you say, this is my job. I am a real estate investor. I'm a real estate expert,
Mhm.
and when you sort of present yourself like that, you have different conversations with people, I think.
Right.
So yeah, so we found most of our JV partners online. And I mean, have we met all of them? There probably are a few of our JV partners that we haven't met in person still.
Mhm.
But we've met most of them in person, thankfully, by now. So in our groups, some of them are like, we have two working partners where a working partner brought their opportunity to us and said, hey, this is a really good deal. Like, they thought maybe they'd wholesale, or they just kind of brought it to us and wanted us to look at it. And we then said, well, this is a great opportunity. Why don't we JV it together?
Right.
So it's like two working partners and one then like passive investor.
Hmm. Yeah, smart. Well, that makes a lot of sense. And now you've definitely got the Moncton market dialed in.
Yes.
So
Yes, I
you've,
would say so.
yeah, and you're starting to expand outward. So moving ahead, what are you guys' plans for the next year or two? Where do you see your real estate investing business going?
So with the 32 units in Ontario that we will acquire next week or the week after, I think it's the week after.
Mhm.
Um I really see that as a way for us to be like leveling up into like a whole new side of things. Like
Mhm.
it's a really like it's a the numbers on it work very well, and
Mhm.
it attracts a different kind of investor. With a lot of our Moncton properties, we were able to buy a duplex for $200,000
Yeah.
in a
Hard.
market where the rents were going up and up and up and up. Like, it
Mhm.
made so much sense, but the price point, like the purchase of entry was so low, like people were buying properties on their HELOC, right?
Yeah.
Like, people from Ontario were able to buy a property on their HELOC.
All cash. Yeah.
Um,
Exactly.
which, I mean, like, good thing or bad thing, like, we know what's going on in the economy right now, but I mean, like, all of our investors are still in a really good spot. All of our Moncton properties still cash flow, right?
Hmm.
Like, that's one thing that we tried to do from the very beginning is like add in extra cushion, right?
Mm.
When the interest rate was 2% and some of our investors got it for below 2%,
Hmm.
it's I mean, we really had to make sure there was a cushion in there, and so we did. And so it like these properties do very well now. They've already had a huge equity bump in them. And like, when things calm down a bit, and we'll be able to pull their initial capital out, no problem.
Yeah.
And then it'll just be like a great cash flowing property.
No, that
But
makes a
now,
lot of sense. So what are you guys doing moving
yeah,
ahead?
focusing on ahead now.
Yeah.
Yeah, but now, so we are looking at doing larger multifamily investing. It requires a lot more capital up front because the down payment is bigger. There's a little bit more of a complicated structure. You don't just have one JV partner. You're talking about limited partners in a
Yeah.
limited partnership, and you have a lot more people in that investment. But um I mean, my goal is to talk to as many people as possible and get to know as many people as possible, because I see how powerful these kinds of investments are, and I see how it can, like, literally change people's lives. Because
Hmm.
when I talk to people, and when we talk about RSPs and we talk about how people's investments have been doing in the stock market, every single time I hear another story is like, I don't even want to talk about that. I just lost 50 grand, like,
Hmm.
like, it's there's so much turmoil out there, but here in this space, there's so much opportunity to make that. I mean, to make that money
So I
back.
guess what markets are you guys focusing on is the question I guess I'm asking. So you want to keep buying multifamily properties.
Yeah.
Are you focusing on any? Are you wanting to keep focused on New Brunswick? You're starting to do stuff in Ontario. Is it just kind of like where the deal makes sense, or where do you see yourselves moving ahead with your
Yeah.
next
So
acquisitions?
So I mean, again, we're very educated, and we're really trying to focus on where things make sense. So
Hmm.
Moncton still makes sense as a
Hmm.
place, with the low purchase price. We can still buy multifamily here. There's still lots of opportunity for rent increases, and
Hmm.
so Moncton is still a great market for us. We will be building in Ontario in
Hmm.
Deep River, because we have an opportunity to build in the region where we
Yeah.
already have a multifamily. We know that they need it. And so it's going to happen. Alberta is on our radar. We have partners there that would like to purchase a property. And so, we've been actively looking there with them. And right now in Victoria, we have a single family home that we've already purchased, and we're utilizing the Missing Middle initiative in Victoria, which allows us to, take a single family home and then replace it with a 6-unit without having to do any kind of like rezoning.
Nice.
So it's a really, and then there's a few more incentives from the government, which make new builds really not really affordable. I won't say that.
More
But
attractive.
they make it more attractive. And then back here we have a 12-unit that's coming
Nice.
to Riverview. So
Nice.
we'll be building on one in there.
Very busy. Fantastic, Nicole. Well, hey, time flies when we're having fun. If people want to connect with you, what should they do?
Oh my God, I can't believe it.
Yeah.
So if you want to connect with us, you should probably just find us on Facebook. So my name, Nicole Fiore, it's at the bottom of the screen. That's how you can connect with me easiest. But our company is Coast to Coast Homes Canada.
Fantastic.
And that's on Facebook.
Nicole, always a pleasure. Keep up the good work. You guys are doing amazing things.
Thank you so much.
All right, everybody. Take care, and we will talk to you on the next episode. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.